Hello, we are True Blue Consulting, and we're excited to present our strategic analysis for Citizens Bank and Trust, the oldest continually operating African American owned bank in the United States. My name is Hunter, and I'm joined by my teammates Jermaine, Ashton, and Sydney. Together, we analyze the competitive landscape and internal capabilities of Citizens Banking and Trust to help identify key strategic priorities moving forward. To begin, we evaluated Citizens Bank and Trust using Porter's 5 forces, and it helps us understand the competitive pressures impacting the organization. First, for the threat of substitutes is high. Fintechs, neobanks, and mobile-first lenders offer low-cost, highly convenient alternatives. These digital platforms reduce switching costs and making it easier for customers to move away from traditional banks. Next, industry rival is also high. Citizens competes with regional banks and large credit unions, many of them equipped with stronger technology, larger budgets, and more extensive branch networks. This creates intense competition for depositors and loan customers. Next, the threat of entrance is moderate. While banking is heavily regulated, digital platforms have made it easier for new entrants to offer banking-like services without the same physical infrastructure. This continues to raise competitive pressure over time. We also found the bargaining power of buyers is high. Today's customers expect real-time information, seamless mobile banking, and personalized service. When banks fall behind technology, customers can easily move to more digitally friendly options. Finally, bargaining power of suppliers is low to moderate. Although smaller banks face pressure from technology vendors and funding sources, Citizens benefits from its CDFI and MDI status, which improves access to grants and low-cost capital. Next, we conducted a SWOT analysis to identify internal strengths and weaknesses, as well as external opportunities and threats. Among the key strengths of the bank's 120-year legacy, deep community trust and mission-driven approach focus on financial inclusion. Their CDFI and MDI designations unlocks grants, federal support, and unique lending opportunities that many competitors do not have. However, the bank faces several weaknesses, including limited digital banking capabilities, a smaller footprint, and reduced marketing reach compared to larger institutions. Citizen also face lower economies of scale. For opportunities, Citizens can leverage fintech partnerships, expand its digital presence, and capitalize on growing demand for inclusive, community-focused financial institutions. Federal CDFI funding also continues to grow, providing support for modernization. Finally, key threats include the risk of fintechs, neobanks, regulatory requirements, and economic instability that disproportionately affects low to moderate income customers. Competition for high-quality borrowers also remains fierce in the more saturated markets.
I am presenting a value chain and resource analysis for Citizens Bank and Trust. A value chain includes all activities involved in creating and delivering a service. For Citizens Saving Bank and Trust, value begins with its primary activities. The bank acquires deposits from households and small businesses, building a stable funding base rooted in long-term relationships. As stated on the bank's website, the focus of our corporate existence is based on socially conscious ideals to provide assistance to low to moderate income and minority groups to enable them to realize their economic dreams. This mission supports strong customer loyalty and consistent deposits. Loan origination and underwriting rely heavily on local knowledge of Nashville and Memphis borrowers. Conservative standards help protect asset quality while keeping lending aligned with community needs. The bank's partnerships also strengthen its lending impact. For example, Citizens Saving Bank and Trust in Nashville has a partnership with the Titans Foundation for small business and housing development loans and works with Operation Hope Incorporated to support financial literacy programs. Operations and transaction processing include mobile deposits, debit transactions, and loan servicing. Digital tools play a growing role, as the bank notes. Our digital banking service encompasses mobile banking, online banking, and external transfers, with encryption and two-factor authentication in place to protect your information. Systems keep costs manageable while maintaining security. Customer interface combines in-branch service with digital access, allowing the bank to offer modern convenience while preserving a personal service that defines community banking. Marketing and community engagement are relationship-driven, supported by long-term involvement with faith-based groups, nonprofits, and small business networks. Support activities include an experienced board, strong risk management, and financial oversight that preserve safety and stability. Human resources emphasize hiring staff familiar with the local market, while technology and procurement rely on dependable vendor partnerships. As one Citizens Guide states, suppliers are evaluated on quality, cost competitiveness, technological superiority, financial stability, and on-time deliveries. The bank's resources include tangible assets such as its financial position and branch facilities, and intangible assets such as brand reputation, deep customer relationships, and local market knowledge. Human resources include experienced staff, and technological resources include online and mobile banking supported by external vendors. This value chain and resource base demonstrate how Citizens Savings Bank and Trust delivers consistent, relationship-centered community banking.
For the financial performance analysis, I wanted to discuss the company's size and growth. Total assets have increased from $135 million in 2021 Q4 to $184 million in 2025 Q1, indicating a $50 million increase or 37%. The bank has been able to attract deposits and expand its loan book, growing the balance sheet despite a challenging interest rate and regulatory environment for smaller banks. The growth rate is consistent with other niche community institutions operating under $250 million. Profitability has been much less stable. A return on average assets starts strong at 1.87% in 2021 Q4, but drifts downward and becomes negative in several quarters, with a low of negative 1.74%. Net operating income also began solidly in 2021, but then turns negative in 23, indicating that the earnings base is under pressure from higher funding costs, credit costs, or operating expenses. Net interest margin has also compressed over time from 5% in 2021 to 3.2% in 2025 Q1. This is significant because it shows the spread the bank earns on loans and investments has narrowed. The efficiency ratio has deteriorated since 2021 Q4, where it was at 60%. In 2025 Q1, it is now 93%, which reflects a cost structure that is heavy relative to the institution's revenue base. The leverage ratio fluctuates between 9.5% and 11.7% over the period and remains within an appropriate range. The loan to deposit ratio stays high and fairly steady, averaging 95 to 96%. Which indicates that most deposits are being deployed into loans, leaving less of a liquidity buffer. However, liquidity improves from 8% in 2023 to 13% in 2025, showing an improvement on the balance sheet. Overall, strengths: the company has solid asset growth and stable capital and funding structure. However, the challenges remaining are the earnings volatility and the periods of negative profitability, margin compression, elevated efficiency ratios, and the increase of NPAs.
In this section, we'll walk through Citizens Bank's strategy, some key benefits and challenges that come with that strategy, the strategic concerns that emerge from our analysis, and finally, a set of recommendations for Citizens Bank on how to address our concerns. The bank most visibly applies a focused differentiation strategy. Using this strategy, a firm serves a narrow market segment more effectively than broad industry-wide competitors by leveraging unique capabilities and core competencies to create superior value for that group. We can see this clearly in the way Citizens operates as both an MDI and a CDFI. Rather than trying to be everything to everyone, Citizens intentionally targets African American and other minority communities, faith-based organizations, and low to moderate income individuals in Nashville and Memphis. These are segments that are often overlooked by larger banks. Citizens is not trying to be the lowest cost provider. Instead, their strategy centers on offering a distinct relationship-driven banking experience that reflects deep cultural understanding and personal service. One of the clearest examples of this is their private banking model, which emphasizes preferential pricing, personalized advising, and direct access to executive management. All of these features are designed to elevate trust and loyalty within their niche client base. Through the Renaissance Initiative, for example, Citizens leverages its brand equity, historical credibility, and social mission to strengthen its position in its focus market. Citizens' century-long reputation as the oldest Black-owned bank in the United States has become one of its strongest differentiating competencies. The bank's mission and resources are valuable, rare, and difficult for other banks to imitate. and unlike many other banks, Citizens is deeply embedded in the communities it serves. Our first key concern for Citizens Bank is the growing tension between its mission-driven programs and its need for stronger profitability. Or, how is it going to preserve financial strength as a CBI? As an MDI and CDFI, Citizens exists to expand financial access for underserved groups and help revitalize local communities. This mission defines the bank's identity and is the foundation of its focused differentiation strategy. But it also comes with higher operating costs, thinner loan margins, and limited scalability, as we talked about on the previous slide. A successful strategy must both fit the firm's environment and generate above-average returns. Citizens clearly passes the fit test, especially in its core market. The question is whether it can continue to deliver strong performance under increasing cost pressures and competitive threats. From a corporate-level strategy perspective, even focused firms sometimes need to adjust their scope and cost structure to remain viable. For Citizens, the resources and capabilities that make it distinctive, like one-on-one service and personalized coaching, are becoming more expensive to sustain as the bank faces rising interest rates, competition from digital-first banks, and broader industry consolidation. Ultimately, the concern is this: how can Citizens continue to live out its purpose while maintaining the financial strength needed to do so?
Citizens should broaden its customer base while keeping its identity as a relationship-driven, community-focused bank. The first step is taking a deeper look at customer lending and demographic data to understand who is actually driving both mission impact and long-term stability. Groups like first-time home buyers in emerging Nashville neighborhoods, minority-owned small businesses with steady borrowing needs, and young adults entering the banking system all align with Citizens' mission, but they may require more structured outreach and scalable processes. Knowing which groups deliver sustainable deposits and strong credit performance helps guide where the bank should prioritize resources.
To preserve financial strength as a CBI, our recommendation does not require Citizens to change their mission. Instead, it's about making that mission more sustainable by being more intentional about where the bank invests time, people, and resources, and by growing the areas that already perform well. We propose 3 practical steps. First, Citizens should systematically review its financial and community impact data to identify which programs generate both meaningful mission impact and sustainable financial performance. For example, the Financial Freedom Home Ownership Workshops consistently attract strong participation and measurable outcomes. However, they may require process efficiencies to scale. By evaluating programs through the dual lens of mission and margin, Citizens can decide where to streamline, where to expand, and where to potentially redesign offerings. Second, Citizens should start in its strongest markets, Nashville and Memphis, where it already has deep relationships and brand recognition. In these markets, the bank could launch 1 or 2 strategic collaborations, such as a church-based financial literacy series delivered through Operation Hope, or a partnership to automate small business loan processing with a technology or community partner. These collaborations would reinforce Citizens' community presence while also lowering administrative costs and reducing the strain on internal staff. In other words, they preserve the high-touch, relationship-driven experience, but in a way that is more scalable and efficient. Third, Citizens should reinvest the savings and additional revenue from these efficiencies into scalable programs, especially digital banking capabilities and financial education initiatives. The 2023 Impact Report already identifies these as growth priorities. Investing in digital tools and training can help more clients build credit, improve savings habits, and access affordable financial services at a lower marginal cost per customer. This reduces reliance on high-cost manual processes, supports long-term profitability, and aligns perfectly with Citizens' mission to expand financial access in underserved communities.
Citizens can launch targeted community collaborations in Nashville. The bank already has deep credibility in this area, so starting with 1 or 2 focused partnerships gives them room to grow without stretching their teams too thin. Examples include faith-based financial coaching through existing church networks, joint lending programs with nonprofit housing, or community development organizations and small business mentorship, or microloan partnerships with local economic development groups. These types of partnerships expand reach, reduce the burden on internal staff, and build trust in underserved communities while staying true to Citizens' identity. Finally, reinvesting in these relationships and doubling down on the groups that show healthy performance ensures the bank continues to grow in a way that's sustainable, mission-aligned, and true to its roots.